Let's start off. Your word of the day on a day like this.
Rotation. We've seen thus far this year some big rotations taking place in the market. Value is outperforming growth. International stocks are starting to outperform domestic stocks. And sectors such as consumer staples, energy, utilities are outperforming information technology. I don't know if those rotations are going to hold for the year, Frank, but investors would be wise to start to position their portfolios to look to take advantage of some of those rotations because the Mag 7 isn't necessarily going to continue to lead the way for this bull market.
I want to talk to you about sentiment. We're seeing a lot of bearishness out there, but also it's kind of due. If you look at things like the Atlanta GDP now,
yes,
1.5% just a few days ago. Now they have their estimate for a Q1 GDP decline of 2.8%. When we're looking at these safety plays, is there some place that's safe from this kind of decline? And again, it's a forecast, but from this kind of decline.
The only thing I've reminded investors is that trying to time the market is an exercise in futility. And generally, the biggest up days in the market come after the biggest down days. We know that you need to be positioned in stocks. It's not about timing the market, it's time in the market. So there will be more short-term bouts of volatility ahead. Already this year, we've had 7% of the time where the market has moved by 1.5% or more or lower. Last year, that happened just 4% of the time. We're nearly double that already. So buckle up and brace yourself for more short-term bouts of volatility. But that doesn't necessarily mean you should abandon the market or abandon your longer-term financial plan.
Let me put you on the spot. We're just hitting a bunch of sectors going into correction: tech, materials, consumer discretionary. Very quickly, any one of those in buy the dip mode, or right now, are you just keeping a hands off of any of those?
I think you stay true to your risk tolerance and your overall investment plan. I like information technology. The AI revolution has a long road ahead, but don't give up on aerospace and defense. We saw coming out of Europe, they were actually pledging $840 billion in additional defense spending. Look for European defense contractors like BAE Systems to benefit.
Which is your pick for us.
Which is my pick of the day.
One question for you. If you look at the chart over the last week, big spike up 20% or so over the last week. Are you worried that all the gains are actually priced in when it comes to that name?
I think there are more gains ahead. They're still trading a relatively reasonable valuation, around 22 times current earnings. They have a 12-month dividend yield of over 2%. I think they benefit from this increase in defense spending.